Good morning, folks. Welcome to the Extended SPY report. The market is gapping up significantly. It gaps up, it gaps down. We fill the gap. It's pretty much a way that traders who are trying to make a living day to day, especially from a professional sense, are fading and filling and so on and so forth. Now, if you have the privilege, and it is a great privilege, to work for yourself, you can easily look at something and go, listen, that form looks terrible. I am not in a space that I've got to eke every penny out of the market. I am not going to play where my fingers are going to be likely to get chopped off. Now, if you happen to work within some other sort of entity, a firm or whatever, and you have to trade, then, hopefully they've got some good folks that are screening some things, and maybe they've gotten you screening some things properly so that you can isolate the likely trades. Now, here's the thing: there are a lot of trades that can be made, but overall the market is without form. And form is what we need to trade consistently. If you just trade the markets without thinking about what the forms look like, along with these technical indicators, you're always going to have a roller coaster balance. That's just the way it goes. All right? So you've got to consider, what do my technical indicators say, but where are they saying it? Okay? If you live in a space where the weather changes all the time, you'll know exactly what I'm talking about when I go, you really need to pay attention to more things than just what the sky's doing 5 minutes from now, okay, or 5 minutes ago. Um, so, that being said, some of you are still going to want to trade in this mess. And if you want to do that, that is certainly your prerogative. Let's talk to the chart right now. Here's what's going on. We are gapping up into this region. Notice that's the 200 on the 1-hour chart. The 50 on the 1-hour chart is sitting at the weekly pivot. That region inside of there is going to be a hefty chop zone. Now, if we're fortunate and we do come in to this 164.12 area, which has been pretty good to us, really, truthfully said, right up over 164s, has given us a good trade into resistance many times. And so we're going to be looking at that once more. If it pulls back and holds 164, then you'll probably have more upside action. Here's what the market is saying. I've had a gap up, and it's held for the most part, and then I had a gap down and it filled, and then I had a gap up and it filled, and then what did we have here? Then I had another gap up and it faded, and now I have another gap up. I don't know what that's going to do, but I will say this: if it falls, if it begins to lose this level, I am going to suspect that I can take a trade short all the way down into this level. And I'm not going to, sit around and wait for that. I am going to try to capture the points where they sit. This is a space for the quick, right? Either you're quick or you're dead. One or the other. And to use the old Wild West adage right there, it really is the case here. Now, if you don't have to trade, you're not sitting on a desk where somebody says, hey, you got to trade, I would like for you to consider perhaps trying to avoid the bad trade by staying out of trading if you are not skilled. That's all I'm going to say there. All right, so if you get up above this 164.55, you have 164.81. And then there is this congestion region. at 165.04. All right, so that's it from the upside. From the downside, if you take the loss of the top areas right here and you begin to take the trade, your stop action needs to be, 164.65. Nothing more than that. But you can trade short down into the pivot, which is 163.50 after it loses this area. And then, here it is at the VWAP. You just see how it goes. If it loses the VWAP, stair step down, right? I had an ABCD pattern that extended us into here. Now we had this area. That's not the right form, right? Patterns are great to trade if you've picked the right one. And that's all that I have to say there. Picking the right one becomes a very, very important event. Okay, so that's it for that. Do we go lower and come down into this S1 and then make a lower event? I have got nothing to tell me correctly what's going on. All right? Level to level trading, the only way you're going to make money, in my mind. Let's take a look at the IWM. Wow, that looks even worse than the others because that's really flat. Look at how tightly coiled these moving averages are. Here's the bright spot. With the IWM, and now they don't normally print this early in the morning, but with the IWM, wow, it is printing already, all the way up here at 98.74. What do you know? Resistance level 1. Well, I got to tell you, that kind of gap probably not going to continue in this kind of market. I don't really think that traders are going to give us the opportunity to trade this big steep gap at the open. I honestly believe it's going to fade, probably starting at maybe 7:30, 8 o'clock, maybe 8:30. There's just no way. That is just an ideal fade spot, and so I would not be surprised if sellers came in and tried to force that down. Now, here's the question. When they force it down, is it going to hold support? Or is it going to give us another region that we can step through all the way down into lower levels of support? Okay, so if we are sitting all the way up here at R1, and it begins to fade, the second it loses 98.68 or so, it should go into 98.48, 98.19, 97.96. This is going to be where support is going to sit. The weekly pivot, the prior day's pivot, the VWAP, the 50, the 200, all of these guys are going to be saying, hey, listen, I captured this, I held it, I think I ought to move up. It's going to be a very, very solid congestion zone, no doubt about it. Wait for it to bounce here and hold 98 before you decide you're going to take it long. All right? Otherwise, you're just going to watch it drop. If it comes into this region and begins to lose these levels, underneath here, you will have lost a significant amount of support. Underneath 97.59, you're going to have a continuation event. But here's the thing. If you open up and you've been falling and you get to here and you lose that level, you know it's going to here, and then to here, and then to here. All right? If indeed, in the odd chance, and we always have to prepare for the odd chance. See, if we don't, then if it comes, we're totally unprepared. And I can't tell you the worst way to trade is to be unprepared, right? If you can't find a space where the level is telling you, hey, listen, I need to look for that, and you are not thinking about, wow, what if it gets there? How should I trade it? If you're not thinking about that, you are not going to trade well. It's just that simple. The trader trades well if he's prepared for every observance, right? If you don't prepare for what happens to the upside, if it goes to the upside, you're going to be the deer in the headlights. All right, so those are the levels that we look for. Hey, listen, if something crazy happens and it pops up over this region, it's going to stair step probably there. Hang on. That's a lot of levels, but it will be very messy, I believe, if it does that. And then it'll go into this region right here, which is pretty solid congestion, actually. Right, 99.85. So that's what we're going to be looking at, folks. For those of you in the iron condors, feels really good when the charts are sitting around here, but these big pops and drops and not particularly good for my psyche at this juncture. But those of you in that, just realize that in essence, we are in a trading range. And so, you know, those kinds of things, you're just going to have to wear it out. Okay, so now we've got the same sort of thing here in the Qs. A little bit more channel oriented than the others, but sitting, notice this, the Qs look a lot more like SPY as opposed to the IWM, because the IWM's moving averages are very tightly bound together. There's only a small region in the IWM where trading is really going to be dreadful, and that's right in here. For the Qs, as well as SPY, there's a whole region that's a little bit noisy. Let's see where the Qs are gapping this morning. A lot of trading this morning. Very interesting. Qs continue to rise above 73.02. Here it is at the weekly pivot. Here's the test of the weekly pivot. So, what should we have happen here? Well, we're kind of in the middle between the 200 and the 50. Very dangerous trading space because there are all kinds of parties trading totally different things. And so for the general trader, if it begins to lose this level, you can pretty much assume it's going to come back down to 72.73. If you want to get involved there, you're going to be able to capture that. If it gets above maybe 73.07, let's move that down here a little bit. That's probably not right. That's probably it. 73.13, probably going to get to 73.30. If you are able, with size, to be able to capture from 13 to 30, knock yourself out. I would watch it from 73.30, see if it loses that level. If it does, it should fall back into the midline. But this is a region where I have to say to myself, wait a second. What's my probability of having a consistent rhythmic move so that I can get in and get out? Slim to none, and slim is on the bus. Okay, as they say here in the South, what that means is, because I do know I have a lot of foreign-speaking followers, that means not likely. Okay, see everything in the neutral zone right here, plus moving up into this region. This is going to be very, very messy. I would trade on the edges, and I would trade on the edges of the breakout, or the break up, or the breakdown, right? Not keen on trading in the center here. Trading out. If you trade on the edges and it starts holding this region and these guys are moving to the upside, you can take it long at 72.73. If the charts are dipping down in your technical indicators and it comes up into 73.30, you can take a short into that region. Or if it breaks out and over 73.34, you can take that trade into 73.47, 73.64. Or if you lose 72.73, chances are the VWAP is not going to sit in your way if you lose the 50, but you have to be cautious about that. 72.64 is where that VWAP is. So you wouldn't want to have any size until after it loses that level. Sorry about that. Um, so if you lose that 7273 area, it gets to 7253, 7245, and then comes down into this congestion event. 7217 seems to be the next mark, which is pretty significantly far away from 7302 in the Qs. But the Qs seem to be the most difficult one to trade today. I would probably stay away from that one. If I had to choose a couple of these to trade, I would start with the IWM, and then I would work with SPY because it's already sitting at the top of the range here, right? So that's that. Watch it extend. If it extends over the top, then, and we open up, watch for the fade. I find that to be the most likely thing to occur at this juncture. Good luck trading.